The biggest important event, in fact, is the FOMC announcement that came in. Before we go to that, let's quickly also take a look at what the US Treasury yield is doing. Because remember, when the market sentiment is strong, reflects well for equities, reflecting well for oil, for gold. But there is one index that actually slips when the market sentiment is positive, and that is the bond yield. Now, as of now, US Treasury yield has fallen nearly 5 bips to 4.044%. 2-year Treasury yield is also down 4 bips. Remember, yields and prices have an inverted relationship, and so on the back of that, when all the sentiment is positive, you have yields that are inching down slowly, some softening seen on that front. But let's begin our coverage this morning with the biggest cue for the markets, the comments from the Fed Reserve Chairman Jerome Powell. While the central bank has kept its key lending rate unchanged at 5.25 to 5.5%, Chairman Jerome Powell said a rate cut in September is on the table, even as the FOMC members cited further progress towards that 2% inflation target. But the Fed chief also cautioned against assuming that a cut was definitely happening. So some positive indication there, but nothing for sure coming on that front. Forecast for the September rate cut, he said, was based on the assumption that the US economy follows its expected path. Let's go across and hear out what Fed Chair had to say and what has actually buoyed the market momentum as of now. Let's listen in.
On September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September.
Well, there you have